very much a seller's market in lithium right now. Whilst it would be good to ink an offtake agreement, I think that it's more important to ink a good one, one that's solid, binding, bankable, and with the right sort of people.
Welcome back to Rockstock Channel, and thanks for checking in. Before we launch into the interview, we'd like to thank all our Patreon sponsors. And for those of you who are new, share a bit about us. RK Equity is an advisory firm run by Rodney Hooper and me, Howard Klein. We are exclusively focused on raising awareness about companies producing or developing the next generation critical raw materials that are powering Tesla's EV battery energy transition. Please register your email at rkequity.com and follow Rodney and me on LinkedIn and Twitter. Please also subscribe to this channel, Rockstock Channel on YouTube, as well as Lithium-ion Rocks on SoundCloud for our podcasts. Please note, Rodney and me are not financial advisors or broker-dealers. Nothing you hear in this video is investment advice. Please do your own research and read the disclaimer at the end of this video or on our website. Thanks again for the support, and let's get into the video.
Okay, good morning. It is Tuesday, July 27th. I am here with Keith Coughlan, the chairman, managing director of European Metals Holdings, which operates Australian listed, and as of today is now officially has ADRs trading in the US. So we're going to talk about that. We have been advisors to and investors in European Metals Holdings since around August or September of last year. I have my Mr. Market scoreboard in front of me, which shows European Metal Holding kind of in the middle of the pack here of advanced development exploration. This was as of the end of June, about 200 million market cap. There are not too many European projects on this list, but there's one in Germany here, Vulcan, DLE Brine, which has a very high market cap. Rodney has written a research note. It's on our website, in February about European Metals Holdings. The Cinovec deposit has been past producer. It's a brownfield. Keith, you started and have been involved with this company since 2013.
There is a very large historic tin resource there, and it's a historic tin mine. And there was a very large but non-compliant resource for lithium as well, just at a stage when lithium was beginning to get a little interesting. So we had quite a bit of work to do over the next couple of years, bringing that resource into modern day classification and starting some work on various potential process paths that we could use to extract the lithium in particular. So it's been an interesting journey, quite a long journey, but I think it's gone by quite quickly.
We're now 8 years into this. You've had scoping study, pre-feasibility study, and then a second pre-feasibility study from 2019. In May of last year, you basically sold 51% of the project to your partner Chez for $32 million, and you have appointed SMS Group, which is a very large EPCM group out of Germany. I want to talk about these partners and your joint venture and the path from here to final investment decision, which you hope could be as early as 9 or 12 months from now, once the definitive feasibility study is complete. I do want to talk as well. There's been a lot of press in today's, apart from your listing here, the timing is good. The Czech government is committing up to $2 billion for a 40 gigawatt hour plant. And there's been talks that they're talking to Volkswagen as well as LG Chem as potential partners for that plant, but also importantly, Chez as a 70% government-owned utility and something like a 13 billion market cap company. They've said in these articles that an attraction and part of the battery plant is that Chez is going to supply lithium to the battery plant. With that as the backdrop, your PFS from 2019 had a 1.1 billion NPV. If you have half of that project, that would be 550 million. You're trading at 35% of the NPV of that study, which was based on much lower prices of lithium hydroxide than today. I think it was based on $12,000. So if you were to plug in, and as you do your new definitive feasibility study, I imagine you'd use higher prices. So I think listeners could expect, that NPV, likely to be a bit higher. And the production that you're talking about in that study was for 23,000 tons of hydroxide, but you believe that there's scope potentially to to double that?
We're feeling in a pretty good position at the moment. Obviously, the macro for lithium globally is very strong. And I don't think anywhere in the world is it as strong as it is in Europe. If you look at the project where it sits, the number of battery factories being built around it, the number of vehicles that are built within 500 kilometres of the project, I think is in the vicinity of 6 million per year. And obviously every year that goes by now, more and more of those vehicles are being made electric. We see a tremendous level of support from the European Union and the various member states to an electric vehicle future, a tremendous amount of support to a battery industry, and more recently a realisation and a commitment to developing the region's own critical raw materials. So all of these things are very much in our favour. And, the news that came through today of the Czech government signing an MOU on that battery factory that you mentioned, Howard, with our partner CHES at a location that is 50 or 55 kilometres from the project is fantastic news. So, as I say, we're feeling quite good about where the project is and what the future looks like for us.
Keith, one of the announcements that you guys recently put out was an LCA that you are going to be using in Minvaro. Do you want to just give the listeners some of the key standouts that make the project lower carbon?
Anecdotally, we believe that the project is going to stack up very strongly from all ESG credentials, but in particular the CO2 footprint. And so we've gone to the step of involving Minvaro to give us a formal independent study, that we hope will demonstrate what we think is the case. And there are a few reasons why. How close we are likely to be to our end users. We don't envisage having to move end product more than a couple of 100 kilometres, whoever it is in the region that we end up selling to. But there are a number of other factors as well. Re-entering a historic underground mine is obviously considerably better from ESG perspective than trying to break new ground, particularly if it were an open pit that you were trying to permit. So all of those things are positive. Specifically, CO2 energy consumption. If you look at producing battery-grade chemicals from zimbaldite, the mica host rock that we have, versus spodumene, for example, it's a significantly lower cost operation. To begin with spodumene, you have to calcine it at a very high temperature, then cool it down, add a lot of acid, and then have a second stage roast at a moderate temperature, compared with our process, which is a single stage mid-temperature roast. So you have a significant energy saving, which not only helps us from our cost point of view, but also obviously is beneficial from an emissions perspective as well. Yes, we also recover significant levels of the lithium in our most recent tests, up to 92%. So you're mining less rock effectively to get the same amount of lithium, or you're getting more lithium from the same amount of rock. And all of these things help, as I said, not only the economics of the project, but also the emissions profile, the CO2 footprint. And that's why we're going down the path of having Minvaro prepare this formal study for us so we can demonstrate that officially, formally, and in an independent sense.
What's the sort of timing on that, Keith?
We were promised the third quarter of this year, so at some stage in the next 2 months, I suppose, Rodney.
Okay, excellent. One of the things that's key with projects always is, when you give away the crown jewels. At the moment, you guys haven't signed any offtakes. Obviously, the talk of the battery plant will impact that, but if one were to, think about it and look at it from EMH's perspective, can you give us an idea of what the ideal partner would look like in terms of, possibly capital and volumes taken and so on, duration?
Yeah, and this again, I don't think it's necessarily a straightforward response. I think firstly, it would be partners as opposed to partner. I think it would be prudent to have more than one offtake partner. I could envisage having 3 or 4, and potentially with different types of deals, different types of arrangements, depending on when those offtake agreements were set. Good to have a cornerstone, obviously vital for funding a lithium project to have a bankable offtake agreement. So, having something non-binding or just an MOU status, it might be nice, and it might be nice for the market, and it might kick your share price up, for a little while. But I'm really interested in something that we can take to the bank and secure the finance that we require to build the project. That's really the key for it. From that point of view, an off-taker who brings money to the table is obviously preferable, whether that's the form of an investment or whether that's in the form of a prepayment on offtake, doesn't really matter. I think it's preferable, but I don't think it's vital. I think if you have the right bankable offtake partner, then the funding will come. The way the lithium market is right now, I think the funding is there if you have the right project and you can demonstrate that you have that right offtake partner. And the EU has committed significant funds to the green energy revolution, some 550 billion euros, so not small money. And there is a strong push to get projects like ours into production. So I optimistically feel that we will receive some sort of benefits out of the EU system by way of potential grants, by way of what you might call soft debt, export credit finance, this sort of thing. And so I think we'll be in a very good funding position relative to other projects because of those sorts of things. And that's another factor where I think it's not urgent or vital that our key offtake partner, invests money into the project.
In the original flow sheet, Keith, you had a carbonate to hydroxide step. Do you envisage retaining that flexibility in the final design that you're looking at now?
We do, and it's for the flexibility, but it's also because it's actually better, for the flow sheet to go that way. It's just a quirk of the mica of the ore that we have, but it's beneficial to us to go that way from a metallurgical point of view. Everyone wants to talk about hydroxide right now, and so we probably will end up going to hydroxide for the full production. And I would imagine that the first offtake would be for hydroxide, but I don't think there's anything wrong whatsoever with retaining that flexibility, and there's a very minimal cost to us in doing so.
And if you review and it makes commercial sense for the project to expand up to 50,000 tons, could you have the flexibility of half and half or some combination?
Yeah, well, certainly. If we expanded the project and it's something that we have definitely considered and something that we have spoken about in general terms publicly, the current business plan, phase one, if you like, of production, 25,000 tonnes per annum for about 21 years, utilises less than 10% of the overall Cinovec deposit. It's a very, very large resource. So clearly, looking at expanding that is important to us, and we have begun that work, and I think it's something we'll be able to talk about publicly before terribly long. When we centred on that original business plan, there were a couple of factors involved. Firstly, 25,000 tonnes seemed like a good level for a new entrant to the market. This is a few years ago, and the market was a little different than it is now. And the demand, was a little different than it is now. We all hope that the demand would grow as it has, but clearly I think it's exceeded most people's expectations. So that was one factor. Secondly, it already delivered a estimated capex 2 years ago of almost $500 million US, about $480 million US. We were a very small Perth-based company with no strategic partners, no big brothers, no one like Ches behind us. So it was already a big ask to look at one day needing to raise, close to $500 million US. And that's why we centred on a project producing 25,000 tonnes. There was no other real magic in it. To take it forward, there's no reason that we can see why we can't significantly increase the volume, potentially up to doubling it, but it's something that we need to do the official work on. I stress, but when we do that work, it's going to be in such a way that it doesn't detract or distract from the current work, the DFS. We're not interested in doing anything that's going to slow the current process. And the second part of your question, yes, no reason why we couldn't simply decide to make half of that production in carbonate and half in hydroxide.
Europe, there seem to be a lot of layers and a lot of organizations that have funding and the support and the strength to actually get behind projects? Some light on that.
One significant thing we saw emerge from 2020 and the COVID crisis was a refocusing back onto local supply chains. You know, the dangers of global supply chains became more evident just purely from a logistics perspective, and some of those logistical challenges that people face continue, you know, even through to today. So that was one factor. On top of that, there's the mineral security factor. You know, we're all aware that currently some 80 odd or slightly over 80% of all the world's lithium chemicals is controlled by China. You know, if you're the EU and you commit 550 billion euros to a new industry, it's probably not sensible to rely on China or any other single partner or single supplier for those battery grade metal, those battery grade chemicals. The EU has said that it wants to be 80% lithium self-sufficient by 2025. It's a target they have no hope of reaching because there's simply not enough lithium projects in the development phase in the EU. But as an aspirational statement, I think it demonstrates the commitment that the EU has to, you know, developing this industry, including the raw materials. So our formal involvement with the EU is via an entity called the European Institute of Innovation and Technology, EIT, who are the principal facilitator of the European Battery Alliance. So they're a big organisation, well-funded, etc. So we have a formal agreement with the EIT InnoEnergy, and as part of that agreement, their role is to, apart from generally support us, it is to introduce us to potential sources of funding, be it at a grant level, a debt level, and quasi-government debt. They have, for example, facilitated introductions to EIB, EBRD, you know, for example, plus commercial banks within the EU, all the sorts of people that we will need to be talking to as we approach that final investment decision in putting together the funding package. They've also introduced us to potential off-takers in the region and facilitated those conversations. And they also are involved in assisting us with messaging, you know, any issues that come about in the process, permitting, ESG issues, any of those things, which happily none of those issues have arisen as yet. So we have at least weekly contact. We have a regular weekly call. But at times, you know, it's 2 or 3 times a week. You know, they are committed to helping us. And if you like, they're an entity that sits between, you know, that enormous pool of money that I've spoken about and real on the ground business. So it's a facilitating role. They're very committed to seeing this happen.
Okay, excellent. So, Keith, a lot of catalysts between now and sort of year end then.
Yeah, I think so, Rodney. As I said earlier, I feel very good about the project. You know, I can see, you know, where I think we'll be in a year's time, and then again, you know, when we go into production a little after that, you know, there are a couple of steps and a couple of gaps to fill in between now and then. But you know, I'm quite confident we're going to get there. You talked about offtake earlier. You know, and all junior mining companies are sort of generally quite frantic to get offtake. I think it's become very much a seller's market in lithium right now. Whilst it would be good to ink an offtake agreement, I think that it's more important to ink a good one, you know, one that's solid, binding, bankable, and with the right sort of people.
You're saying, you know, you don't necessarily need a check to be written by an offtake partner, you know, if it's a you know, a good binding, you know, quality offtake, but nevertheless, you would still need to fund your half share of the equity.
We have in mind that the capex will come out somewhere in the vicinity of $500 million, and we think that the project will need to find 30% of that in equity, or $150 million. And if that's the case, then European Metals' commitment would be $75 million. So, you know, clearly we don't have that money currently. We would need to have it when we get the final investment decision, obviously. But I think we'll look very different when we get the final investment decision. We'll have a bankable project. We'll have a bankable offtake agreement at least. we'll know the project's going into production. I think the lithium price will be higher than it is today. So there are a number of reasons to think that, you know, our share price might better reflect our share of the MPV. We have seen other lithium companies who have had significant share price reactions to, for example, offtake agreements, and taken advantage of that share price reaction to raise money at that point in time. You know, we have listed our ADR today, as you mentioned, Howard, having access to, or potential access to, that, you know, the pool of funds that would now be able to invest into the company if we were to seek to raise money, you know, in the US.
Building out this project, if you could talk about SMS, in addition to the, you know, the minority protections, you know, in your joint venture agreement with Ches, you know, you need to build a team, right? And you need to realize this project. You know, what are kind of more medium, long-term aspirations, you know, potentially beyond this project, or is this something that, you know, I guess over time might become 100% owned by Ches, or you know, some other partner, you know, may take over? When
we entered into the relationship, you know, we're a very small company on the other side of the world, entering into a JV with, you know, as a minority with a partner in their own country, you know, majority owned by the Czech government. We reflected, you know, that imbalance, if you like, by way of a very strong and protective shareholders agreement that formed the basis of the transaction. You know, you talked about, you know, could Ches end up with 100% of the project? That's possible, but it is something that is stipulated in that shareholders agreement. It's very clearly set out, and it has nothing to do with, you know, our market capitalization or where our shares are trading. So, you know, we feel comfortable with our position as a minority shareholder in this project. I also have to say that Ches has been nothing but a pleasure to work with since day one. You know, we signed the agreement on the verge of Europe shutting down for COVID. You know, I got out of the country 24 hours before it would have been impossible to do so. We were in a very uncertain time of the world. I think oil was negative price. You know, the world and everyone's future was far from certain. And having said that, Ches stood up, wrote the check, money went into the bank 2 days later. And, you know, the project was de-risked and its future largely secured at that point in time. So very happy to have Ches as a partner. Not only, you know, do they have 30 odd years of operating in the country, they've got, you know, there's 30 odd thousand people on their payroll. They're very, very well resourced. The amount of work that is being done by them in country behind the scenes on the project is significant. Their transition from coal to green energy is very helpful for us. The location, or the proposed location of the gigafactory that we spoke about earlier, is a historic Ches power station town, you know, that they'll be looking to transform from an old coal-fired power station to, you know, to the country or the region's first lithium-ion battery gigafactory. You know, they own all of the EV charging stations throughout the Czech Republic. They are a shareholder in the largest European onshore wind farm, for example. So the green energy credentials are very strong, and getting more so, you know, as time rolls by. They're fully committed to green energy and going forward. In terms of where we want to be going forward, you know, we think there's a great deal of value to realise from this project. You know, you're talking about the MPV where it currently sits at 1.1 billion US after tax from the last PFS. I fully expect that number to go up significantly with the DFS for the reasons you mentioned. You know, lithium hydroxide is considerably higher than $12,000 a tonne now. We used a tin price at the time of $22,500, and I think it was $35,000 or $36,000 today. You know, so there are considerable reasons to think that we're going to see better economics on the project, and that's just on the phase one. You know, if we do go to this phase two, as we're hoping and expecting to do, I think that, you know, that's going to be significantly enhancing of the NPV, the whole value of the project. So, you know, there's no reason why we would think to be hanging up the for sale sign at any time in the short term, Howard.
Okay, and then could you just describe just building a team? I mean, you've been sitting in Perth for all throughout COVID. There's a team advancing kind of a DFS, but come financial investment decision, you need to build a team. Ches is not in the lithium business. You're not in the lithium business. SMS is a 4 billion euro revenue. They're in the steel industry. And why don't you describe SMS and the nature of their contract? Again, in particular, it was unique that I've ever seen that they're giving you a lithium hydroxide product quality guarantee, right? Which is really critically important in battery quality. Not everyone can make that grade, and they're guaranteeing the cost. So are a large member, are they going to be outsourced? Are they going to be building this project, an integral, parts of the team? Like, how does that describe all of that?
So first, to understand SMS and who they are, they are a very large German family engineering company with a long tradition of very, very high standards of work. They also very well connected into the German finance industry. If you look at a number of projects for public companies that they've been involved in the past, you mentioned Neo Metals, for example, but you could look at the high purity alumina project they're involved with in Malaysia currently. Quite often when they get involved in these projects, you see German government money following, or German bank money following, KfW, for example, et cetera, et cetera. So very well connected at that end of the European finance system. They're very good at, what you might call complex process flow sheets, very, very exacting in what they do. So it's important to understand that, in giving the guarantees that they've given us, SMS took nearly 8 months of their own due diligence on us and on the project before, they agreed to be the lead engineer for the DFS, which might give you some understanding of, how much of their own work they've done at their own cost too. So they will deliver to us at the end of the DFS a lump sum fixed price turnkey EPC contract, and it will carry process guarantees and product specification guarantees. And as you say, that is obviously very, very important. Will they build the project? Well, they will obviously be in a good position, having done the put together the EPC contract, but the contract that they currently have doesn't include, building the project. But, clearly they're going to be in the box seat to do that.
Talk a little bit about, this is a zinnwaldite deposit, not a spodumene deposit. People look at, the head grade and they say, whatever, it's I don't know, 0.4, or they're used to looking at spodumene, 1% plus, but you do have a tin credit.
Zinnwaldite is it's a mica. It's a little like lepidolite, which might be another lithium-bearing mica that people are aware of. One of the keys for us, it's paramagnetic, and so we can remove the tin and tungsten right up front, straight after the feed cab, with wet magnetic separation, and immediately that beneficiates the lithium grade in the con. So it goes up to nearly 3%. With that one single step, and that single step is obviously not a cost to us; it's a profit center, because we get the tin con and the tungsten out of that. So that's the first thing to understand. It's not apples and apples with spodumene, but there's pluses and minuses, and the pluses for the mica more than offset from a cost point of view. The other thing to understand is that the mineralization is it's very broad throughout the entire ore body. We're not chasing narrow veins of mineralization. It will be a bulk underground mine. So we'll be taking out large amounts of rock, all of which are mineralized. If you look in our presentation, there's a cross section there, and it shows numerous drill holes we have that have continuous lithium and tin mineralization over 200, 250, 300 meters of continuous mineralization. So that means a great deal of what we pull out of the ground pay to it. So this is another significant advantage. I mentioned earlier the differences from a processing point of view with zimbaldite as well. And, those are the factors that I've mentioned that mean that despite a lower head grade, that we can produce battery-grade lithium hydroxide ore carbonate from the deposit, from the ore in the bottom half of the global cost curve, probably one of the lowest hard rock cost producers globally when we get there, for all of those reasons.
What's the path to permitting?
So we're expecting within the next 2 weeks, I believe, the feedback from the Czech ministry on the environmental impact assessment that we submitted 2 months ago. The turnaround time was designated to be 2 months, so we're about due for that, which will give some ideas of whether they see any issues from an EIA perspective. Interestingly, that submission was accompanied by an independent study under the Natura 2000 EU initiative, a very positive glowing report from that independent consultant. We don't see any environmental issues. We've been running baseline studies for nearly 3 years now. We've been doing behind the scenes environmental work for at least that long leading into this process. So it's not something that's just happened recently. I mentioned earlier that, we're seeking to re-enter a historic underground mine. So clearly the permitting issues there are significantly less than it would be if we were breaking new ground, if we were trying to dig an open pit, for example. Apart from that, we have Ches as our partner. Ches have been mining operating in the country for 30 years. They know the permitting process inside out, and they know what has to be done, what boxes need to be ticked, et cetera. And, the indication that they've gone to an MOU with the Czech government on a gigafactory just up the road is probably indicative of their level of confidence with regards to permitting for Cinovec.
And they're saying specifically they're going to supply lithium to that battery plant. So I think
and as far as I'm aware, they don't have any other lithium to supply.